unmuted.
Morning, everybody, and thanks for joining this webinar. It is a live webinar, so if things can go wrong, they probably will. How we're going to work this is everybody's on mute, so you can listen to the webinar, and if you've got any questions, type them in the chat box, and I'll try to answer those questions at the end. Alternatively, I'll give you my contact details, and if anything you want to discuss offline, please feel free to get in touch with me direct. The webinar is really looking around a couple of the KPIs that I've seen agencies that have produced successful figures use. Apologies if some of it might be obvious to people on this webinar. We've got a mixed bag of people on the webinar, so I do apologise if it's obvious. But it's really trying to get agencies looking at how they can set KPIs and then how they can use management systems to provide information on those KPIs. I know there's a vast number of management systems out there. The system that we use is Synergist, mainly because I feel it's a very easy system to get this type of information out. So we'll start on with the webinar now. The objectives of today are really to look at how top agencies manage their success, some of the KPIs they use to manage that business, how they plan them, and how they report on those KPIs. These are typical 5 KPIs that I would see a successful agency looking at. The top one, employment cost versus gross profit. I've got there typically the 55% to 65% range. That has steadily started creeping up to the 60-65% range over the last 2 to 3 years. I think that's mainly due to market conditions and resources such as developers, web designers. Their salary demands have seemed to increase over the last 2 to 3 years. I also think agencies themselves have a bit of a part to play in this. And speaking recently to several MDs that I work with, they've expressed concerns on some of their junior members of staff, be it digital guys, be it designers, be it account handling staff, being poached by other agencies for fairly significant increases in their wages. So those employment costs have steadily started creeping nearer that 60 to 65% range. The successful agencies I work with plan to make a net operating profit of between 15 and 20%, and they will also keep their new business targets to around that sort of figure. So they're not throwing lots of cost and resource at driving new business. They're ensuring their existing client base is managed well, but still keeping their eye on the fact that we do need to ensure new and exciting businesses coming into the agency. They'll also ensure that their accrued income doesn't go above 50% of their monthly revenue, and they'll also keep an eye on their bought-in costs, their purchase costs, and try to keep that around the 20% mark. So those 5 key KPIs are measures that I see the successful agencies that I work with trying to enforce. Now, the 3 that I'm going to focus on today are cost forecasting, the employment cost versus the gross profit, and the new business targets. The reason we've chose these 3 is we actually run a LinkedIn group called Agency Food, and it's a group for directors of agencies, MDs, owners, people that work in operations, and it is a group to allow them to discuss and communicate around issues they face in their agencies and see if people have got advice or good ideas on how to solve them. So if you're not a member of that group, if you go to LinkedIn and type in Agency Food and request to become a member, we'll get you a member of that group. We also do a quarterly survey to members of that group and also to a wider audience of agency across the UK. And the 3 common issues that come up in that survey is the employment cost versus gross profit, the new business target, and keeping costs under control. So that's why we've chosen those three today. Now, we'll look at a cost forecast. I've got a fairly basic one set up on an Excel spreadsheet so we can see how we can forecast costs across a month. I actually split my costs into cost centres, and I'll explain why. But I think it is vitally important to be reviewing your actual cost versus what you've planned each month. And many agencies that I see and I work with actually don't carry out that exercise on a monthly basis. They're not even carrying it out on a quarterly basis. So I think that's something that all agencies should be mindful of and should actually put into operation. We're also going to look at how we can plan the income from the resources we've got, not just in terms of income, but also in terms of the number of hours, because that has an impact potentially on what we're trying to generate in new business. There seems to be issues in agencies where we may have a lot of, say, design work, but not digital work. And unfortunately, those skills aren't interchangeable. So being able to plan out the hours we've got in the agencies is fairly critical. We're also going to have a look at the percentage utilisation that you may be achieving within the business, but also getting a feel for what's the value of the non-utilised work. What is that in reality to the business? How much lost revenue does that mean to a business? And again, understanding the hours and the discipline that must be sold direct in the account management team, the account directors, or the new business team to focus on a particular type of discipline if we've got capacity in that area. So an example of staff costs for GP, just for maybe some of the non-financial people that have joined this webinar. So if we had forecasted staff costs of 1.2 million and we had planned income of 2.2, we'd be running at a 57% ratio, which would fall within the 55 to 65% KPI. For the example of this webinar, I'm extracting purchase costs and marking it up and just looking at it as if it was straight turnover we could achieve by selling the hours within the agency. So if we just look at a typical spreadsheet that an agency might have in operation, or I would use, we can see here this cost forecast where I've actually broken it down into staff costs, overhead costs, variable costs, and discretionary costs. The reason I break it into those four sections is because in reality, if your costs are too high, the only one you can really look at changing is your discretionary costs. Your overheads and stuff tend to be fixed. Your variable costs, yes, they're variable in terms of how much you use a telephone, how much you're using your overdraft, or how much an accountant's charging you. But the only one you can really change is what you're spending on new business and marketing, training, etc. So that's why I have them in the four areas. But the one I'm going to focus on today is the staff costs. So here you can see I've broken the staff costs down by salaries. I've also taken into account national insurance, pensions, any health insurance, cars. So I have a total cost of the resources in the business. Now, this is a fairly simple spreadsheet. I've got others that I have to use where businesses are taking into account bonuses and the calculation of NI based on them. For this purpose of this webinar, I'm keeping it fairly simple. But you can see here we've forecasted the costs over this financial period, which runs April to March. And indeed, this organisation's got a cost forecast for their staff of 1.268 million. Now, based on those resources, I've then put this into an income forecast. So again, here I've broken it down across studio, digital, and account management, and I've got a small area here for directors. So I can see I've got a resource pool of 26 people that make up that 1.2 million. And what I've done here, I've said, what is the target utilisation for each of those disciplines and how many resources do I have in those disciplines? So it does a fair few calculations, this spreadsheet, but what I'm basically getting at, my KPIs, is what is the weekly target utilisation of the whole business, which in this example is 55.56%. What's the target income, which is the 2.2 million, based on the number of hours and the utilisations I want to achieve. And also I've got an average charge rate in there of £90. Typically those charge rates may be different across the disciplines. I've also considered what's the value of the non-utilised hours. So I know in this example, this agency has actually got hours that they're planning on not selling worth 1.7 million. So if we had additional works coming in from clients, rather than jumping on the recruitment consultant telephone, I might consider what can I do with the value of non-utilised hours? Can we shave any of those hours off and bring it back into the income pool? So agencies that I see working really efficiently would always be considering that. I've also then got a target of the weekly hours that we can sell, which in this example is 548 across the agency. I'll just make this a little bit bigger for you guys. 548 across the agency, and monthly we've got 2,373. And you can see down here, I've split that out by the various disciplines: creative director, designer, senior designer, and I've got the hours per week and the hours per month, and what percentage of the business that makes up. So we can use these percentages in these hours when we're actually planning our new business strategy. So if we look at how we've planned those KPIs, if we now look at a management system of how we might get information on those KPIs, if I just go to my Synergist system here and I go to if I go to this report section, what I can do here is if I look at a capacity view, I'll be able to see that over the coming period, this agency has got these various hours per month, and I've chosen 4 disciplines here, standard ones that I would see in an agency, of what they've planned to sell. So we can see we've got a total of 2,100 in October. As an agency, we can deliver 2,373 based on our planned KPI. So in October, this agency should have spare capacity. We've got hours that we've not planned to sell, which will have an impact on the income. But in November, we've actually planning to sell more than we can deliver. So from this information I can draw straight from Synergist, I can look at this against the planned KPI. You can also see here, if I just go back to the spreadsheet, that I've got in this example, a developer, we've got 569 hours we can deliver in a month, and in my Synergist, I can see I've got 604 in October. So I've sold more developer time in that period than we can actually deliver. So as a business, how do we operate? Are we getting people to work overtime? Do we need freelancers? And I've looked at this on a 3-month basis, but I could look at it at a longer period if the agency is planning longer, and make some resourcing decisions based on that. Or can I look at increasing those utilizations and stop some of the internal time to be able to deliver those hours that I've sold? So that's how I'm using information from a management system and measuring it against the KPI that I've set for the business. If I just explain where those numbers are coming from, I've got a job set up on the system here, and if I just go to this job here, you can see that I've estimated across this job, and I've broken it down by various phases and stages that you may see in this example, a web job. But what I can see is a total estimate of hours for delivering this job. I've also, in this example, recorded some time, so I can see the actual hours against the budget. Over here, I can see we are 66% through those hours. So in theory, we should be 66% of deliverable within that job. So that's fairly simplistic, and I know there are lots of reasons why that won't be the case. For the purpose of this webinar, I'm just pointing out some of the key information we might get from here. Now, the hours are appearing in those October, November, December periods, because what I've done, I've put together a Gantt chart in this example, which shows when those different stages, the planning, the wireframing, the hard usability testing, needs to be delivered. And if I just include time estimates here and say, look at hard usability testing, I can see in that period of October, we've got a senior developer, a web designer. We've split the web design across 2 people, myself and Bridget, and we can see that needs to be delivered in October. So when I'm looking at the capacity plan, those hours are falling into that period. If I was to move that Gantt chart to say September, or move it out to November, those hours would move accordingly. I've also got here a global view of all the jobs and the actual to estimated hours. So account managers, project managers can be reviewing those jobs on a daily basis and consider, we've spent 50% of the budget, are we 50% through the deliverable? Going on to utilisations, we planned that the agency should have a 55% utilisation KPI, and we can see on that job that I have actually recorded time. So now if I was to look at a utilisation report, and this is a fairly basic one, but if I just go to my staff utilisation report, and I'll choose it for the period of last week because I know I've got data in there. So if I choose this report here, I can see I've got the utilisation per individual. I can see how many hours were spent on internal work. I could analyse that further if I wished. I can see how many chargeable hours they've done and therefore a total hours for that period, for that week. And I've got my utilisation running at 67.62%, which again is above the KPI set for the business. So in the examples I've just shown there, I've planned out KPIs in terms of my income and my utilisation, and now I'm using management information from the Synergist system to say, have we sold enough hours in that period to achieve that income, and then looking at the time that's being spent to ensure that the utilisation is fitting in with that KPI. So on the cost forecast KPI and the resource cost to GP KPI, that is how I would use information from a management system, in this case Synergist, to report back on those KPIs. Looking at the new business side of things, if I go to this report here, one of the key reports that I may see being run in an agency would be something like a new business pipeline. So this is a fairly numeric one where I've got lots of numbers in here and the clients and what I think they're going to close each month. So we can see in this example we've got £263,000 worth of potential business. I might decide to look at what does that look like by the type of work, the disciplines in the business. So now I can see the value of that across, in this example, design, digital PR and social content. Looking at that in terms of numbers of the sales value, which could be gross profit or net profit, whichever you decide to report on in your business. I could also look at this in terms of the number of hours that are in there. So I could also say those turnover figures, those sales figures equate to this amount of hours of these different skills over that next 3 months. So by managing the new business pipeline, estimating jobs accurately and saying this is what I think is going to close in these periods, yes, I can get a figure of the value in terms of the monetary value, but I also can have a look at the value in terms of the number of hours. So that's fairly critical in the planning stage because it does filter through to managing those costs and making sure we've got the right business mix coming in terms of the number of hours we can deliver each month. There was something that I should have showed you guys and I didn't. If I just go back to my capacity planning, which was looking at the number of hours across the different periods, again, that's fairly numeric. We would normally look at showing this in a sort of graphical format for the people in agencies to see how many hours of those different skills have we got in each period. And again, we could do that with a sales type approach. The sales side of things, looking at the pipeline, we may also consider looking at targets against individuals and also clients. So if I was to choose a period, and I'll do this for last year, if we look at the year of 2014, here I can see each individual handler within this agency, the target that they was given and how they did against that target. So in this example, as an agency, we were quite good. We were all there or thereabouts with targets, and in some cases we overachieved. But it also could show that against the clients. So which clients had which target and how we did against those targets. So again, I can be using this to ensure it's tying back to that new business target I've set, whether that's 15 or 20% of the agency turnover that's planned for this year. Here, I may also look at things like my charts, where I'm looking at the value of new business we've got at its initial communication stage, at first discussion, where we're presenting and presenting the solution to the client, where we're negotiating, and where we've got verbal commitment. So we can look at it in this bar graph type format. We may also look at it in a funnel chart, where we're trying to fill the funnel at the top here to hopefully get the sales coming out the bottom here. So I'm hoping that what I've showed you there is illustrating by planning a good cost forecast, understanding that those resources can deliver this amount of revenue and we need to sell this amount of hours. We can plan the utilization and indeed the capacity forecasting of the business and have a better understanding of how we direct the sales team in selling the various disciplines that we offer as an agency. A few other KPIs that we probably should consider. Managing the cash in a business is always important. One of the areas of doing that, and I see a lot of digital agencies making or agreeing invoicing schedules on deliverables. So when we've finished part A, we will invoice you. One of the problems with that is that you're not in control of part A, the client is. So maybe having a better billing schedule that is based on timeframes rather than deliverable can help manage that cash flow. Also making sure your debtor KPI, you've got less than 5% on 90 days. That's a fairly critical KPI in terms of once you've done the job and invoiced it, managing that. And also review your WIP and your accrued monthly income. So what I'm looking for there is there's regular invoicing happening. We've not got work on a job for 30 or 60 days that we haven't billed because it's going to have a real impact on the cash within the business. So in summary, I would say business planning is key, and you need to set what is expected of the business and plan for your performance and your profit. Don't just let it happen. If you've got plans in place, you can manage against those plans and review the KPIs. It's essential that you review your costs and your revenue periodically, and I would say at least monthly you should be reviewing that. Looking at the actual time that is spent and recording, and does it fit in with that target utilization? And if you are getting busier as an agency, don't just jump on the phone to the recruitment consultant. Can you do anything with the non-chargeable time internally to bring that back in to a chargeable resource? Do use the KPIs that you've set and review them on a regular basis. And as a financial person, don't forget the balance sheet. It is key within the business. And an FD that I work with on a regular basis, he always says to me he's got one KPI. That KPI is cash, and he measures it by more. So I argue that you need the other KPI to ensure that happens, but I think that is worth remembering. Businesses run on cash. So I hope that was useful, and if anybody has got any questions, please feel free to put them in the chat box, and I'll try to answer them. Or if you want to contact me offline, there's all my contact details. So let's have a look. I think there's one question coming in now. No, I think that was just about my microphone dropping off. So has anybody got any other questions? Okay, it doesn't look like there's any questions. So thanks everyone for your time. I hope you found it useful. And if one piece of information helps you, that's fantastic. Well, have a good weekend. You've got my contact details, and I will email every one of you individually just to say thank you. So you've got the contact details direct. Please feel free to get in touch if you think myself or the agency works can help your business in any way. Have a good weekend, everybody. Take care.